Hey market friends. Welcome back to Will of the Market. Today we're digging into Paysign, Inc. Ticker. Pays. What they do, how they compare to peers, what the stock's been up to lately, and how investors feel. Think of this as money heist meets fintech, strategy, risk, high stakes. Let's get into it. 1. What is Paysign and what they do? Let's start with the basics. Who is Paysign? Paysign is a fintech payments technology company. They are not a bank, but they provide prepaid card programs, payment processing, digital banking solutions, via partnerships, and customization for clients across industries like healthcare, pharma, hospitality, retail. A major niche for them is patient affordability solutions, helping with payments in healthcare settings, e.g., paying for treatments, reimbursements in trials, plasma donation networks. They enable payment disbursements in clinical trials, reimbursements, and help people with high medical costs manage payments. They build and manage prepaid, virtual, and physical card programs customized for client needs. For example, a pharma company might pay patients using a Paysign card. In short, Paysign is a backbone in payments infrastructure, especially in high-complexity areas, healthcare, pharma, etc., where regulation, compliance, and flexibility matter. 2. How Paysign compares to peers and its strengths, risks. Who are its peers? And where does it shine versus where it's vulnerable? Peers, comparators. Other fintech payments, card program companies, especially smaller specialty players. Larger payments processors, Visa, MasterCard, Global Payments, Square, etc. Though these are much broader in scope. Healthcare payment, patient finance companies, specialized fintechs in medical payments. Strengths, competitive edges. Niche specialization in healthcare, pharma gives it a moat in complex regulatory environments. Ability to customize programs, virtual, physical, flexible disbursement, that many big players may not tailor to small clients. Growth in patient affordability is a strong tailwind. Rising medical costs, copay complexity, they are unlocking value there. Investing revenue guidance reflects growth in that segment. Long history in prepaid and integration with clients in regulated spaces. They already carry some trust that new fintechs may lack. Weaknesses, risks. Dependency on client contracts in narrow verticals. Losing a big client would hurt more than in diversified fintechs. Margins under pressure if transaction volumes don't scale or costs, compliance, fraud, operations, rise. Regulatory, compliance risk, especially around payments, healthcare, data security. Valuation risk, growth expectations baked in might be high. 3. Recent price action and what's going on. Here's how the market's treating Pays lately. Current price. $6.13 United States cents. With tilde plus 5.1% intraday move. In the last 3 months, the stock rose strongly, up approximately 158.9% per investing.com after recent earnings. Over the last 12 months, it's up approximately 53.8% per the same source. On earnings, the Q2 2025 revenue beat expectations by approximately 2.2%, but EPS missed by approximately 33%. Following an earnings release, the stock dropped approximately 26.7% the next day. Short interest is up. In August 2025, short interest rose approximately 37.1%. Analyst sentiment. Consensus is strong buy, with average price targets in the $7 to $8.40 range. On valuation and stats, Pays has a beta around approximately 0.9, volatility near market average, and its 52-week price change is plus 3.5%. So the stock has had a strong run, though not without volatility and mixed earnings. 4. Investor sentiment and what the crowd thinks. What's the mood in the market around Pays? Many see Pays as a hidden gem, a fintech in healthcare payments with room to grow. Analysts raised price targets recently, and independent directors even bought shares, which signals confidence. But caution exists. The big drop after earnings shows that expectations are high and execution matters. Insider selling also pops up, Some insiders have sold substantial amounts post-earnings. The rebound, plus 28% in a month, was celebrated, but some analysts said it's out of tune with the underlying earnings, implying the stock might be overshooting. So sentiment is bullish but tempered with realism. People believe in the story, but they're watching the execution like hawks. 5. What could go right? What could go wrong? Borrowing a line from The Mandalorian. This is the way, but only if things go right. Upside scenarios. Strong execution in patient affordability and healthcare payments. Revenue growth accelerates and margins expand. More clients, expanded fees, scale effects. Analysts price target upgrades in institutional investment flows. Demonstrating reliability and compliance better than rivals, gaining trust in regulated spaces. Risk scenarios. Earnings misses or margin pressure disappoint. Client loss, contract renewal failures. Regulatory, compliance headwinds or payment, fintech regulation changes. Overvaluation. If the stock runs ahead of fundamentals, a correction could be sharp. 6. Bottom line. If Paysign were a character in Money Heist, it's the mastermind behind the scenes, not flashy like a tech unicorn, but working quietly, designing complex operations under the radar. To me, Pays is an interesting speculative growth fintech. It's not safe, but it has a unique niche, rising momentum, and real catalysts. I'd consider a moderate position if you believe in healthcare payments, and dare to keep close track of earnings, guidance, and regulatory signals. If you like this, smash that like, subscribe, and comment. Pays, if you want a side-by-side. Paysign versus bigger payments fintechs, e.g., Square, Stripe, etc. Until next trade. May your gains be bold and your mistakes small.